evening, everybody. Ethan here from Investing Note. I'm the COO of Investing Note. Can you guys hear me? Or is the music too loud? Today, thank you everybody for joining us. All right, we'll just give everybody a couple of minutes more before we start the presentation proper. So it's a line of events for the schedule today. Yeah, if those people who cannot hear me, you can just put it into the chat. All right. Hope everybody is doing fine. All right. Let me share my screen. Okay, attendees are streaming in. Okay. So welcome everybody. Good evening. This is a formal introduction. So this is actually a market outlook for the last quarter of 2020. So I think right now we're in a pandemic situation, and the last 6 to 7 months passed by so quickly. So we are really in the last, approaching the last quarter of the year. All right, and also today, apart from two special guests, which is Geoff Howie, the Chief Strategist of at SGX, and also Desmond Leong, CEO and founder of Everest Fortune Group, we have as well the 3 top tournament champions, which will be giving some tips and experience sharing as well at the end. So stay tuned. All right. So this is going to be the schedule for today, right? I'll be doing the opening address. I'm Ethan, COO of Investing Note. After that, Mr. Geoff Howie will actually talk about the potential drivers of the STI index for the last quarter of the year. After that, Desmond will actually talk about the Singapore and Hong Kong market technical outlook. Then we'll move on to what are the things that we saw during the tournament, the statistics that are interesting to you guys, right? And also announcements of the daily winners who actually did top realized daily trades during the elimination round, as well as the announcement of the AirPods Pro and Apple iWatch winners, right? Then at the last part, we'll have the insights and sharings by the top 3 tournament champions. All right. So okay, let me just give you all an idea. If you all have never heard of the SG Active Trading Tournament, let me reiterate, this is actually Singapore's largest and most anticipated trading tournament, right? Last year, we had 2,000 plus participants joining this, right? So this year, we also have 2,000 plus participants joining this as well. So the elimination round was about 3 weeks, and after that, the top 10 were transited into a 2 weeks battle royale among the top 10 finalists. All right. So this campaign, those people who actually started to trade, you will notice that this campaign consisted only of DLCs. What are DLCs? Basically, they are called daily leverage certificates. All right. You can just Google them. Information is all out there. All right. So this is what I want to say about the tournament. Thank you everybody who participated in this tournament and made it a success. Great shout out to our co-organizer, Societe Generale, and also our sponsor, SGX as well. Okay. So right now we go in the next segment, which is the potential drivers of the Straits Times Index in Q4 of 2020. So I'd like to invite Mr. Geoff Howie, Chief Strategist at SGX, to actually do a presentation for this part. Check. The time is yours, Geoff.
Thank you very much, Ethan. Let me just start my video too. Okay, great. Thank you. This is a great opportunity. I just want to take a 15-minute time, or 15 minutes of your time to give I guess, a purely informative rundown on the state of our economy and our stock market going into 2021. That is in no way providing any investment advice. So we all know the first half of this year, we saw very sharp economic contractions across the world. Lockdowns contained the spread of COVID-19 to 10 million people with a 4.9% mortality rate. But the problem is the cases have since more than quadrupled to 44.3 million cases. But the more prevalent testing and effective treatments have seen the mortality rate decline to around 2.7%. I guess the adverse social and economic impact of COVID-19 is the biggest market driver for 2020. And as the Fed Reserve Chair noted in primetime TV to US households back in May, the biggest market risk for the remainder of this year and going into next year is obviously resurgent waves of COVID-19. The barometer, as I've got in the top left of this slide, you can see the barometer for global demand, crude oil, shows that, I guess, global demand gauged through energy to propel vehicles, heat for buildings, and electricity, it remains comparatively muted, with Brent crude oil at $41 a barrel. And that's after it ended 2019 at $66 a barrel. So the uncertainty or the lack of demand globally is shown by the spread, or the price ratio spread between crude oil and gold. And that price ratio spread between the two key commodities has stretched to an all-time high in March, based on all the available data we got going back to before 1990. And since then, the price ratio has retraced somewhat by a third, with the gold price at around $19,000 an ounce, 46 times the price of Brent crude oil at $41, but it's still very well above the pre-2020 high of 35 times back in Feb 2016. And I've got here in the top right, you've got the gains of the S&P 500, the resilience depicted by the dark blue line in that top right corner. And that's really on the back of sector weightings, more so than any broad economic transmission effects with all the monetary policy expansionary monetary policy and pumping and fiscal stimulus and so forth. The two key sectors that have been less impacted by the challenges of COVID-19 are technology and healthcare. And these are also the two biggest sectors within the S&P 500. Together, they make up more than 40% of the S&P 500 index. And if you look in comparison, those two sectors, they're also the biggest two sectors of the FTSE All World Index. But in this part of the world, the two sectors make up less than 8% of the FTSE ASEAN All Share Index, which is 5% healthcare, 2% technology. So meanwhile, the technology sector's role in total global market cap has more than doubled over the past 10 years, up to around 17% as of today, from 8% back in 2010. And the healthcare sector has grown its impact in global market cap from 6% to 10%, while the financial sector's impact has declined from around 22% to 18% over the past 10 years. And like in the stock market, your tech and health manufacturing sectors have, of course, been less impacted by the challenges of 2020 in Singapore, as we show here in this bottom right chart with the EDB's semiconductor, electronics, pharmaceutical, medical technology sub-indices of our industrial production for the first 9 months of 2020. You can see those semiconductor, electronics, pharmaceutical, medtechs well outpace the impact of global demand reductions on petroleum sub-indices and transport engineering. And if you look at it, if you imagine a vertical line at this point here from May 2020, you can see this K effect that economists are talking about, K recoveries, where you've got a certain part of the manufacturing base going this way and a certain element of our production base going this way. It basically exemplifies how the Singapore's economy is continuing to see an uneven, gradual economic recovery going into 2021. You're looking from May 2020, and into July, you had the MAS talking about the progressive restart of activity since the end of the circuit break measures The domestic economy was pretty much on track for this sequential growth of recovery, albeit very uneven. So we're seeing very much at the moment this sequential recovery. You know, we've seen, for instance, on the construction side, and I should mention construction because EDB numbers are important, but manufacturing, as you know, makes up 20% of our GDP. Services make up 70%. And the three key sectors here in Singapore that continue to be the most impacted are travel-related, consumer-facing domestic services, and construction. And on the latter, the advanced estimates for our construction sector in the third quarter showed a 45% decline year on year from the third quarter of 2019. And that was obviously attributed to the slow resumption of construction activities, with construction firms having to, apply safe management for techniques for the safe restart. But from the second quarter of 2020, construction sector grew 39% in the third quarter of 2020. And that underlies the sequential recovery we're seeing. Very much like, I guess, the preliminary, the preliminary third quarter 2020 era urban redevelopment private home prices index was confirmed to be up at 0.8% from the second quarter of 2020, which in turn was also up 0.3% from the first quarter of 2020. Also, like the SIPMM, our PMI reports, our NODX reported back on the 16th of October that there's more evidence of a sequential and gradual recovery. And we're seeing in our economy the most job creation in 5 key sectors: information and communications, food services, professional services, healthcare, and finance and insurance. And I guess, as we say, it's uneven in K, but there have been significant highlights. The Singapore Electronics PMI in September 2020 was at its highest level since September 2018. And also on that NODX number, September outbound shipments to Malaysia rose close to 30% year on year, which was the strongest growth pace we've seen since April 2010. But really, everything, as we say, is really staunchly sector driven. As illustrated in the top 3 bar charts here, tech and healthcare have been the most defensive resilient sectors in the year thus far. And that's directly impacted 1/5 of our 50 most traded stocks here in Singapore. The iEdge FactSet Global Internet Index includes 14 of those stocks that, it includes 6 of those 14 stocks that rank amongst the 30 biggest global stocks by market value. And that index generated a 65% return in the 2020 year to date. The thematic indices here identify multiple drivers for the tech sector: cybersecurity, e-commerce, robotics and automation, artificial intelligence, 5G cellular, and of course, digital technology. And within the tech sector, the pickup in global digitalization has supported stocks with exposure to internet enterprises and cloud providers. Very important for us here in Singapore, particularly in our SDI now. Look, so of all these indices, the majority of the key themes in the indices have been very relevant to the overarching theme of the US-China trade war, or have been highlighted in the recent financial reports of our tech-related companies. I mean, the scope of tech applications that support commercial services are very fast evolving. Big tech regulation currently stands at a junction as well, and that could go either way in 2021, obviously pending on the result of the US election. I mean, consider that the total market cap of the global tech sector is now on par with the global financial sector. My understanding is that financial regulation well dwarfs anything that we've got in tech regulation by a long mile. The tech sector remains highly competitive. Your top quartile of stocks have a 40 times median PE versus a 10 times median PE for the lower quartile. The strongest segments of the global healthcare sector have been manufacturers and distributors of medical equipment and supplies, and that's also observed here in Singapore. Our iEdge healthcare index is up 80% this year. That's not the real highlight. The constituents trading turnover has surged close to eightfold from those 30 or so stocks averaging $7 million of turnover a day in 2019 to over $60 million of turnover a day in the first 8 months, 9 months, 10 months of 2020. Stocks that consistently rank in our top 50 by turnover are Medtex, Riverstone, Top Glove, and UG Healthcare. Look, you've got 170 potential vaccines in the pipeline. I think close to 30 are in the human trial phase. Without the readily vaccine available, much of the momentum is expected to continue to be in the traders' focus. Top Glove estimates that glove demand will grow 20% per annum this year and even more, 25% next year in 2021 and 15% post-COVID-19. I guess the third more distant performing sector across the world has been non-cyclical consumers, the likes of Shengxiong and Wilmar, which have, Wilmar up something like 5% in the year to date. Shengxiong Group up something like 35% in the year to date. Shengxiong Group, you might recall, its net profit year-on-year growth in the first half of this year was up close to 100%. It's now a top 50 stock by turnover after ranking as a top 70 stock by turnover last year. But there's also the downside as well. Passenger transportation stocks have been amongst the most severely impacted, and this really matters for our region. Our region is very highly weighted to finance in terms of banks, real estate, and transportation stocks. At the end of last year, transportation-linked industries made up 1/4 of the combined value of the whole industrial sector across Asia Pacific. Hence, that's another reason driving some of the underpacing of the regional traditional indices across the region. But tech stocks have continued to be obviously in focus. We have 6 tech stocks that are amongst our 50 most active stocks on a day-to-day basis. Mapletree Industrial Trust Venture, Keppel DC REIT, AEM Holdings, Netlink, NBN Trust, and UMS. They've averaged around 30% gains in the year to date after similar average gains last year, and strong gains in the last 3 years, including one stock that AEM Holdings, which generated hyperbolic type of returns. Keppel DC REIT's the most recent stock to join the STI. For its first 3 quarters of this year, gross revenue was up 35%. And according to Synergy Research, annual spending on cloud services is expected to double in under 4 years, that they quoted in the outlook. Internet enterprises make up 48% of Keppel DC rental income. And as our data center pure play, the REIT, Keppel DC REIT, has very much performed in line with the FTSE NAREIT subsector data centers index in the 2020 year to date, and it's also outperformed the sector leader Equinix this year. Mapletree Industrial Trust is obviously also increasing its exposure to data centers. It's gone from 18% data center exposure in August last year to 32% in September last year, to 39% in June this year, to 41% in September this year. So it's been gradually increasing exposure. AEM Holdings, you would have seen, that the FY revenue guidance is somewhere between $480 and $823 million, and that was the 24th most traded stock this year. And it's been one of the world's best performing stocks for the technology segment that have market cap of more than $1 billion over the last few years. And possible gains on the back of revaluation. It maintains a valuation still that's lower than its 4 main competitors that are in the business of test handling and semiconductor testing, listed in US, Japan, and Taiwan. And of course, UMS Holdings as well. Net profit was up 47% in the first half of this year, but the sector, as they say, is expected to remain highly competitive. And to quote Andy, the chairman, looking forward, they are mindful there are still uncertainties in the deepening US-China trade war, which is the overarching theme. Currency volatility is also there, as well as potential resurgence of COVID cases. To quickly, I've got a couple of minutes left. Looking at our banks. Now, we've looked at our best performing sector. This is our biggest sector, the banks. I'll cut straight into the banks here. They make up 40% of the STI. It's a significant cornerstone. We'll know next week what the third quarter was like, because they will be reporting, I think, on the before the open on the 5th and before the open on the 6th. No, before the open on the 4th is UOB, then DBS and OCBC before the morning on the 5th. The banks themselves have also seen some rotation in this quarters to date. In the 4th quarter to 23rd of October, the 3 banks saw net institutional inflows around $233 million, averaging 6% price gains over that time. And that was very much in line with the world. All the returns of our banks this year have been very highly correlated to the global banks, particularly the top quartile of global banks by market value. These top quartile global listed banks, they've also averaged 6% price gains in the first 3-4 weeks of the 4th quarter, and that followed median declines of around 24% for the first 3 quarters of this year. It also means banks in this quarters to date have actually outpaced peers in healthcare, technology, and consumer non-cyclicals. The ability to generate income is really important. The Singapore trio have gradually increased their net income to combined quarterly net interest income to above $4 billion in the 4th quarter of 2014, to above $5 billion in the 2nd quarter of 18, and was at $5.4 billion in the 2nd quarter of FY20. They've also grown their Greater China income by 175% over the past 10 years. The 3 banks, after they've been directed to cap their FY20 dividends to 60% of FY19 distributions, they still maintain yields between 3.5% and 4% based on current market prices. And it also sees that the banks are saving approximately $3 billion with that dividend cap applied over a 12-month period. Should also point out DBS and OCBC are still in the top 10 constituent weights of the FTSE Developed APAC ex-Japan Sustainable Yield Index, implying that there is still a lot of strength behind those yields. But look, for the 2020 year, these accommodative monetary policies, the economic lockdowns have made it really tough for global banks. Basically the key themes going into next year, they continue to be, tier 1 capital to risk weighted assets, non-performing loan ratios, for our banks, preemptive provisioning, loan quality, and moratoriums will be really important, just as important as the net interest margins and non-interest income. ROE is the really critical indicator to return on equity. On that ability to generate income, the top quartile of global banks with an ROE of less than 4% generated a median decline of around 35%. While the rest of the banks were basically down around 20%. They've also been really important for the DLCs. As of 23rd of October, our long DBS DLC, the DOXY, it was amongst the top five most actively traded single stock DLCs, posting for that period a monthly gain of around 34% versus that 6.6% return for the actual stock. And as you know, the key caveat is the DLCs offer 5 times leverage on the daily performance of the stock, which gives you ability to capture those short-term trends and get that magnified returns as well as the magnified losses. But back to the sectors, the close cousin to the banking sector is the real estate sector. Real estate developers, operators, and managers, they've also had to grapple with these exogenous declines in property sales and leases. Prudent capital management, ability to recycle assets, diversity of property pipelines, and portfolios are going to be the real key real estate sector indicators going into 2021. For the overall market, vigilance was the word used multiple times in the semi-annual reporting season we saw a few months back, and it was applied in the context of being able to match your balance sheets with opportunities to enhance value. All in all, the sector differentiation has seen quite a lot of rotation throughout the year, and that has been the main drivers of our stock market, and is expected to continue to be so into the end of the year. We'll obviously continue to update you on all our key themes through Investing Note, and through our SGX website and newsletters and so forth. And importantly, I should mention our Telegram service. Look, ASEAN and Singapore, they have a lot of cyclical sectorial representation through financials, industrials, and so forth. So we are very highly aligned with the local and regional economy. It means that regional moves are expected to be aligned with economic recoveries, and of course these K-style recoveries infer some sector rotation. Since 1985, the STI has averaged a 4% return in the fourth quarter of the calendar year, and the medium return is also at 4%. However, the constant caveat, of course, is that past performance won't guarantee anything in the future, and that's really relevant in these unprecedented social and economic times. You've got this big US election occurring with policies and mindsets of the incumbent and the challenger at poles apart, and will have big implications going into 2021, depending on who the winner is. Markets really like a divided house between Congress and the Senate, having two different parties control. The S&P for the last 70 years has performed better in those conditions. And I should also mention that that will be occurring next week, and it's going to be a very big week for results, and obviously the election next week. And we continue obviously to watch closely the recovery of China and the rebooting and the numbers, and particularly that is impacting many of our stocks, of which I think we've got over 150 stocks on our market that report something like 10% to all their revenue to the China market, and hence that is the I guess the key economic driver for much of our stock market as we're seeing going into the next year. But I'm probably 18 minutes now, Ethan.
No worries.
Was that all right?
Yeah, that's all right, Geoff. Wonderful
right.
sharing. Thank you so much for sharing with us, the potential drivers in the fourth quarter. Thank you, Geoff.
Thank you.
So in the next segment, we have the Hong Kong and Singapore technical outlook, which will be presented by Desmond Leong, CEO of Everest Fortune Group. Desmond, the time is yours.
Hey, thanks. Thanks, Ethan. And thanks, Geoff, for the very comprehensive sharing. Just let me see if I can find my screen. Okay. Okay. All right. So just I like to share with you guys a little bit more more of a technical outlook versus a fundamental outlook that Geoff has shared, right? On what we have seen and what we can expect, especially with regards to the LCs, right? So anyway, this is a team that you might have seen, in the tournament, right? A few of y'all might have seen Ella, right? She was on the panel, right? Sharing about the various, the various stocks, particularly the Hong Kong stocks. People are very interested in it, right? And yeah, this is the team that the numbers that I'm going to show you are generated by them, right? So just a really quick introduction to us. Everest Fortune Group, we provide research, to many banks, to many brokers, and yeah, we focus very strongly on technical analysis, right? So one of the big questions that we always have, and this was since last year when we were doing this same presentation, right, for the active trading competition too, was that does technical analysis work for the LCs, right? Does it work for Singapore and Hong Kong stocks, right? Some people think that, or rather what we did last year was we tend to look at the H1 timeframe a little bit more, but this year we move it more to a H4 timeframe. That means the 4-hourly timeframe. And what we realized is that it actually performed better, right? Actually performed better. And I'll be sharing with you some of the things and some of the statistics behind this, right? So for every single later, I'll be showing you a little bit more. But yeah, for every single analysis that we put out, we'll have a trading view link and we track whether it's profitable or not. There are times where we are not so profitable, a series of runs that don't really do very well. But there are times that we do a little bit better, right? So these are some of the figures we found out, right? So out of, so we split it into Hong Kong stocks and Singapore stocks. Right. So over a period of about 3 months, right, we have around 106 ideas for Hong Kong equities and 231 ideas for Singapore equities. And we realized that just Singapore can kind of took a little bit of the edge here, right? With a risk to reward of at least 1:1. Right, we were seeing about 60, a little bit close to 70% win rate. Using technicals, focusing on the H4 timeframe, right? So Some of the interesting things that we some of the interesting methods that we use was it's not very exotic. In fact, most of this stuff, most of you guys would know, right? So what we want to let you all know is that what I'm going to show you next, right? The methods we use to really trade to really trade Singapore or Hong Kong equities using technical analysis is known by everyone, right? It's really simple, right? It's a combining them together allows you to find what we call higher probability setups. All right, so don't be too afraid when if you are not following the markets super closely, or you don't need to read a company's entire financial statements before you decide to jump into it. Sometimes us technical traders, we tend to spend a little bit more time looking at the charts versus like digging into the latest all the latest news and reports. Right, so some of the methods that we use, right, there are the Fibonacci retracements. Since last year, we added three new Fibonacci retracements after a lot of testing. That is the -27, -61.8, and 161.8. So for you guys here, if you're familiar with Fibonacci retracements, right, this is basically the list of numbers which, through a little bit of filtering, we've more or less kind of arrived at, they tend to work a little bit better. Right, extensions have remained the same. We stick to the 61, 78, 100, and 127. We've tried a few other different numbers, but they don't seem to work that well. Okay. Stochastic RSI MACD, we have a little bit of a different way of using it, but it still has worked kind of well. And later I'll be showing you some real life examples, right? Real life examples of how it's applied. Right, support and resistance, this one everyone should know, right? Swing low, pullback, trend lines, channels, right? This tend to work really well, surprisingly well, when you're trading, especially when you're on the higher time frames. It doesn't work so well when you're on the smaller time frames, like the M5, the 5-minute charts or the 15-minute charts. I can't say that, I can't say with a lot of confidence that, those the TA technical analysis works that well there, because maybe there's too much noise, right? There's the natural moving average or the various kind of moving averages that work very well. And lastly, it's very important to also use correlation, right? Because the markets tend to move in tandem sometimes, most of the time, right? So it's important thing when you're looking at correlations, don't just look at one don't just look at one single equity, one single stock, right? Try to look at a bunch of them that are in the same index, they are in the same sector, and if you notice that all of them are showing maybe a bullish kind of configuration, right, that actually increases the probability or the odds of you getting being on the right side of the market, because everything is lining up more properly. It's like the stars are aligning, right? So some of the live examples, right? Now I'll try to keep this short, but some of the live examples I'd like to share with you guys, right? Oh yeah, so this is where we track every single call we do, right? The rest of the team, every single call, we have a trading view link. We'll track it. We have DLC performance count to see how many did well, how many didn't do well, right? But just putting out some of the examples, right? So kind of want to give you guys some ideas, right? So if you're gonna, some of the ideas where you can apply to your analysis, especially when you want to trade DLCs, right? And SocGen is introducing a lot more DLCs, right? So these are some ways that it's always nice to have a huge number of stocks that you can just easily cycle over, right? So this was done on Tencent, right? Very simply, you can see that there was one nice little bounce here, and then price was reaching this level again. You'll notice that the -27 retracement, we essentially put our stop loss below there. And an interesting way that we use the stochastic is that we don't use the traditional 20/80 kind of rule, right? What we try to look for is we try to see what is the market saying. Last time there was a bounce over here, stochastic actually bounced on the 9%, or rather about the 9% level. Last time it bounced over here, it crossed the rather 7.7% level, right? The small little bounces over here, right? You can see that stochastic was holding pretty well over there. So now, once again, stochastic is right at that level, right? So a combination of these things together, right, allow us to pick the entry right over there. And you can see that this is a risk to reward of 1, 2, 3, probably 1:3 or 1:3.5. So it's important to also know that it's not about getting just the direction correct, but get one thing is getting the direction correct. One thing is how much you risk to get to get it correct, right? If my stop loss was like super far away, then my risk to reward maybe is just 1:1. But the tighter you can keep your stop loss, especially technical analysis, right? Usually it's the better risk to reward you can get. Right. So this was one example of using the very classical support and resistance, which many of you guys should know how to do. Right. The next one is descending, right? This what we call little trend lines, right? So one thing to look out for, this was done on venture, right? This was done on venture, right? You can see price like slowly dropping lower, 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 and lower. And one of the key things that I want to introduce to you here is that most people, when they look at stochastic, they just think about horizontal lines. They don't realize that you can actually draw diagonal lines, right? So what we are looking, right, is basically a diagonal line on stochastic, and it looks like there could be a reversal here, right? So same thing, we our first profit target is over here, in case price in case price reaches here and bounce up. But more importantly, right, in this case, our stop loss, we keep it beyond the structure. What I mean by beyond the structure is that if price breaks above here, we know that we are wrong. This move that we had, price going lower, 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 like that, we know we're wrong, right? So most people just focus on the entry. What's equally important is your entry and your exit, right? Knowing where to exit when you're wrong, and knowing where to exit when you're right, right? So this trade worked out pretty well, right? You can see it dropped down to our take profit 1, and then it shot up. So it's important to know that, even though you have in the grand plan, right, is for it to go all the way down to here, it's important to know that, okay, where is the level I know where I can just close off part of my profit, and then move the rest to break even. So I want to show you different sides of it. Not every single trade is a Hollywood trade that makes money, right? You must know where the risk levels, right? This is where I dream it would be. This is realistically, I can see that price has bounced up many times from there. So entry is as important as exit, right? I'm just going to run through another 3 more examples really quickly. For those of you guys who are interested about Fibonacci, right? This is example of using Fibonacci, a combination of Fibonacci, breakout, and trend line, and momentum, right? Usually a Fibonacci extension down to 61.8 is a very realistic, if you apply a little bit of Elliott wave and stuff, right? It tends to be a nice target level. But for it to come down to here, it first must break this support level, right? You can see price keeps bouncing up and bouncing up and bouncing up, and it hasn't broken that level. And it finally looks like it's breaking. Along with that, we notice that, price has been making lower lows, lower lows, lower lows, and it is now below our Ichimoku cloud, right? So that kind of just shows that there's a lot of bearish momentum kind of accumulating, right? And at the break of this, what can we expect? We can expect price to go all the way down to here. Now, why am I showing you this example is not only because it reached its target, but once it reaches target, it bounces up, right? So that's the concept of technical analysis. It's not just your exit levels, especially your take profit levels, must be very carefully planned. You don't just think, oh, I want to make 1%, I want to make 2%, I want to make 3% on this trade, right? You can only trade what the market gives you, right? So in this case, the market gives you, based on this big Fibonacci level, market says there's a very big level over here. If you want to play beyond this level, good luck, right? So for us, this is another example of using Fibonacci, right? So I just want to show you like a bit of everything so that, you'll get a rough idea of some ideas when you want to trade the markets later, right? This was on AAC Tech. Same thing, Fibonacci extension down to here, 78.6. We require a breakout. Very simple trend line. Along with waiting for a breakout over here, right? So you see, price reached there. Actually, it bounced up one time. So it's worth noting. A little bit dangerous there. This is a breakout. Most people love playing breakouts. And one thing I'd like to share with you is that when there's a breakout, right, try to look for this thing called divergence. Many of you guys use stochastic, many of you guys use RSI, right? In this case, what really drove our confidence behind this breakout on UOB was that there was very, this stochastic, it was making this bounce, this bounce, this bounce. You can see there's this thing called bullish divergence here, and price was kind of making lower lows, right? So a divergence is always a very, very good precursor to a breakout, right? So divergence plus breakout, that is enough for us to say, okay, worth playing the bounce up. So you can see price kind of reach all there and then start reversing. Okay. Last example I want to show you. This is one of my favorite. You don't need to use any super complicated Fibonacci stuff, right? But basically, most people know how to draw a trend line, right? Price bounce one time here, price bounce one time here, and price is now at this level. So you combine a trend line with a horizontal support. So previously, price reached this level, right? So let me explain to you a little bit behind the psychology of what we call a pullback support, right? Price reached this level. What has people done? People have, it dropped from here. That's great, right? So as price keeps nearing this level, right? You can see that there are a lot of people who are interested in selling. Every time it's reaching near there, they get excited. They sell off, they sell off, and now they're reaching that level again. What are a bunch of people here going to do? They're gonna sell, right? They're like, okay, time to make some money, right? They start selling, but instead what happens is that, price breaks up. And what happens to these people? The psychology behind it is they're like, oh man, right? I should have closed my position. It goes higher, they can't sleep at night. They're like, oh man, I should have closed that position. Why didn't I stick to my trade management? And it starts going back down. And what happens when it reaches here? They want to go flat. They want to get out of their positions, right? They just had a nightmare of a ride and they close off their positions. So when you close off short positions, you go flat, you're essentially buying, right? And that causes price to go up. So you can see it reached this level, came down again, and then of course it went up again. But I'm more interested in this little move up to here because it obeyed technical analysis really well. Right, so these are just some of the ways that you can apply. It's nothing overly complex. There's no super big Elliott wave and Hurst cycles and stuff like that. But yeah, just simple technical analysis, right, works very well on equities. I would probably look at H4 and H1 timeframes a little bit more. Right, but yeah, this is an approach which if you haven't explored, it's worth exploring. And one of the great things is that with DLCs, you have a little bit more leverage, when you're taking these positions. So definitely something which I think you all can look for, right? And now just moving on, right? Because being very cautious of time. What do we forecast for 2019? So in the 2019 DLC trading competition, right, we were also giving a SG Singapore and Hong Kong outlook, right? This was the official chart that was kind of published on the day. We forecasted that the HSI would drop a little bit more, and if it breaks this level, we can see it drop all the way to 21,482. Now this is pre-COVID. It was published. Roughly in, if I'm not wrong, it's November 2019, right? So almost 1 year ago. Okay, and what happened since then, right, is that price from here, let's see, where was it? Price over here that goes down like that. Okay, price goes down, comes up, and it went all the way down to 21,482. Right, so remember we are saying that price would come all the way down 21,482 1 year ago. Right, it really went all the way down to touch 21,482 and bounce up. Right, so this was our call on the HSI in 2019. It's worked out pretty well, and the same and similarly for STI. right? We are saying that it was published. Well, no idea when. So also in November, we're calling for price to actually, if it breaks this level at 29.66, it will go down to 27.27, right? So similar to that, right? This was when it was published, right? And that's the beauty of technical analysis, right? It plummeted all the way down to 27.27, and a little and much more beyond that, right? And it kind of just got pulled back up to the area of interest again, right? So those were two of our big calls for 2019. I know a lot of people at that point in time were pretty bullish, but it takes if you apply technical analysis the correct way, you can it is possible to forecast the markets, especially with such scary accuracy, right? Amid all the COVID chaos, you're able to call the bounce on the HSI at 21,482. Right. So anyway, what do we expect for 2020? Right. I can honestly tell you that I only have a forecast prepared for HSI because I can't for the life of me forecast the Straits Times index from a technical perspective. It's a little bit too messy. It just doesn't look nice, right? So I'm just looking at it from a technical perspective. What I'm seeing is that there's overwhelmingly bearish signals, right? There's a very nice long-term trend line since the beginning of 2020, right? There's a short-term trend line. As you guys know, I'm a very big fan of the 61.8 extension that comes all the way down to here. Price also broke out of this little bearish channel configuration. If you look at this thing called the Ichimoku cloud, where price tends to obey pretty well, you can see that we are right at the level where price is testing the Ichimoku cloud, and with all of those things combined, we're more bearish, right? Bearish to at least 23,100, and if it breaks that level, we could potentially see it go down to 21,800, around there, right? So I know people might call me a pessimist, but yeah, my forecast last year was going to be bearish. My forecast this year is still going to be bearish, right? Apply a little bit of correlation, maybe STI might be bearish too. But yeah, one thing you realize when you're applying technical analysis is that the higher time frame you go, the less noise there is, right? So in this case, this will be one of the big forecasts for HSI. So keep a watch on this. All right. Thank you very much, guys, for your time. And sorry if I might have overran the time a bit, but yeah, I hope it's provides some useful insights and ideas for you guys.
Thank you, Desmond, for the wonderful sharing. Right. Thank you so much.
Yeah.
Okay. Right now, let me share my screen. We move on to the next segment of our part. All right. So. Okay, so right now, this part, right, is about the tournament statistics. So these are the key tournament statistics that we found interesting, and I'd like to invite our co-organizer, Mr. Alvin Lee from Societe Generale, to start, presenting this part. Alvin, you can have the time.
Okay, thank you, Ethan. Hello, guys. First of all, on behalf of Societe Generale, I just would like to say a big thank you to all of you. Thank you, Investing Note, for organizing the game. Thank you to Desmond and Geoff for the great sharing. And lastly, and most importantly, thank you for all of you who participated in the game. And I think we have, made the game this year, an even more successful one, even under such a COVID situation. So I would like to just do a very quick recap of the statistics of the game. So first of all, very proud to say that this is the largest trading competition ever held in Singapore. And we have got a total of more than 2,051 participants. And they were given 100,000 virtual capitals to start. And then all the trades are transparent and can be found on the Investing Notes website. So it's open to the public to see what trades, what strategies all the traders have done. And then during the elimination round of 3 weeks, the top trader has had an impressive 51% of total portfolio return in just 3 weeks. So it's a very encouraging return. And in the final round, that was only 2 weeks, and the top winner got a 28% in just 2 weeks time. So I think this has already proven that the DLC is able to allow us to make a very substantial return during markets ups and downs. And lastly, in terms of the most popular underlyings, we have seen that as also mentioned by Geoff, the hot sectors this year so far is either healthcare or tech, right? So as you can see here, most of the stocks here are tech stocks. So for the top tech stocks, Tencent, Alibaba, Xiaomi, and Meituan from Hong Kong, and then Wilmar from Singapore. And so we are very encouraged to see that the investors are so aware of the new DLCs, because actually, if I remember correctly, some of these DLCs were still quite new, when the game started. So they are already aware that they have been paying attention to what DLCs are out there, and then whenever they're listed, they know that it is a good product for me to use to express my view to on the stocks. Okay. So moving on to the next slide, I just would like to also do a quick recap of DLC, the product, because after this tournament, I hope you have also become more familiar with what DLC is about and how to use it, and how it can help you to make a good profit in a volatile market. So I think DLC, first of all, it's a very simple leverage product. As you can see, it has a daily fixed leverage. So it's every day you look at the DLC, it's always with the same leverage. And the pricing formula is also very easy in the sense that it's not like many other leverage products out there that have a very complicated pricing formula. So for DLC, it is very simple. So basically, every day you can expect a close to 5 or 7 times return of it. And DLC allows you an easy access to different markets. For example, DLCs linked to Hong Kong stocks are all traded, all listed on the SGX and traded in Sing dollars. So you don't have to create like a Hong Kong stock account, or you don't have to do any currency conversion. You simply just go to SGX website, go to our website, look up the DLC, and then just trade it on your SGX broker account. And the third point being, the flexibility of DLCs, in a sense that it allows you to express both long and short, bullish and bearish view, obviously. And lastly, I think it's also very transparent because it is listed on the SGX, and then all the investors are able to find the terms and performances historically, like all the historical performances are publicly available. So I hope after this tournament, you have become more familiar with the product, and obviously would really encourage you to try DLC for real if you haven't. So if you would like to understand more about the product after tonight, you can go to our website. The link is as shown below, dlc.societe.com. So thank you for participating, and I'll pass the time back to Evan.
All right. Thank you, Alvin, for sharing. And thanks, Societe Generale, for being the co-organizer for this successful active trading tournament. All right. So let's move on. All right. So right now we are at the segment where we will show who are the top 15 daily winners in the elimination round. So how we define daily winners, right, is basically they realize the profit, the biggest absolute positive return for any single DLC on that particular day. All right. So we have Ken Waiting on the 30th of September with a profit of 17,000. All right. Next, Elvis, sorry, 18K. Then we have Sun Yi Chuan at 37K. Mr. Bonfa at 40K. Kenny Chia, who also happens to be the second winner at 41K. Stock Charm at 22K. Brown Cow at 21K. Wow. Okay, this one is amazing, right? So on the 21st of September, it's 52K. It's a short for HSBC, right? Next, we have Brian Halim, who is also a prominent financial blogger. You guys might know him from the blog for Path to Forever Financial Freedom at 21K. MK Chin at 33K. Low JH, 21K. Novice OJT, 21K. FIP 1618, 24K. My Games 1, 8K. And investing at 9K. So, of course, this is descending order from the day of the tournament. Okay, just take note. So all these winners, they have already been received their $60 CapitaLand e-vouchers. Okay, let's move on. So right now, we are looking at the Airport Pros lucky winner. So we are actually selecting 2 lucky winners who actually registered for the tournament. All right. So they are, this one. All right, Mr. Aries 08 and What Frog. Okay, of course, these are not their real names. These are their usernames. So if Aries 08 and What Frog are here, congratulations to you. All right. You'll be walking away with an AirPods Pro, each worth $400. All right. So for prize collection, we'll contact you. Okay, let's move on. So the Apple Watch Series 5, there's one lucky winner. So how we pick the lucky winner is that this person must at least have 3 trades. All right. So who will it be? Right. Drum roll. Congratulations, Mr. Donovan Van GH. All right. So of course, this is once again his username. And he'll be walking away with a Series 5 Apple Watch. All right. So this Series 5 is actually worth $600. Okay. So we will contact you when you are after this ceremony on how to collect the prize. Congratulations once again. All right. Okay, so this part, before we move on to you know, the insight sharing by the top champions, I like to share these slides for the ongoing training promos for the people who actually join the competition and the people watching this webinar as well. So we have a couple of partner brokers: Phillip Capital, FSM1, UOB, Maybank, UOB, Maybank Kim Eng, and Lim and Tan are not participating on this journey with us to actually have exclusive promotions for trading DLCs. All right. So if you take out your phone, scan it, all the promotions are actually there. This will lead you back to the tournament final round website where all the information are there. So do take a minute, scan it, and you will enjoy all the promo. Okay. All right. Okay, 5 seconds, 5, 4, 3, 2, 1. All right. Okay, this is the most important, you know, and the most exciting part of our, you know, webinar today. All right. So this is the insights and the sharings by the top 3 tournament champions. All right. So I'd like to show you this video. So this is our official prize presentation award ceremony, right? So these 3 guys actually beat 2,000 other participants to reach this level, all right? So here are your top 3 traders, all right? In 3rd position with 18.55% total portfolio returns, we have Wee Yi Xiang. Congratulations, Yi Xiang, for being the 3rd. All right, so right now I'd like to invite Yi Xiang to actually start to share a bit on you know, how he trades and which stock he's looking at in the near term, and you know, to give our audience some tips and advice. Yi Xiang, congratulations.
Hi, Ethan. Thank you so
Yeah.
much. Yep. So, first of all, thank you to the Investing Note team and the various partners for organizing this competition, and thank you for the attendees and the viewers to be here with us today. So maybe I'll just start off with how I started my trading journey, right? So I was actually very interested in the idea of being able to have my money work for me instead of working for myself, right? And the idea of earning passive income and growing my wealth through investing in the financial markets. So that was how I got myself started in reading up on a lot of investing, financial books, and just watching videos, attending seminars, and consuming whatever resources that I can find on the financial markets, right? And it was very funny because I actually went in with the mindset of wanting to learn investing, but along the process, I got exposed to the idea of trading as well, right? And I realized that trading was more suited for my personality type, and I really liked the concept of trading a bit more than investing. Yeah, so I went deeper into the research on trading, and after gaining some knowledge, some theoretical knowledge on trading, right, I decided to put those to real life application by putting real life money into the markets. That was how I actually got started in trading. So I created a brokerage account with one of the local brokers here. I bought my first share. It was this on SGX, I remember. And from there, I slowly moved on to Hong Kong and US stocks. And yeah, and 2-3 years in, I'm here, still trading. So that's basically how I started.
Awesome, Yi Xiang. So, what are some of the stocks that you're looking at for the near term?
Right. I think as mentioned by Geoff earlier on, right, and Alvin, right, the main industry in play right now is tech and healthcare, and I still believe that technology sector is still going to continue growing in the near future and even for the next 10 years, right? So I'm really looking into technology stocks. So for US markets, I'm looking at the main names. I'm sure all of you know Facebook, Amazon, Microsoft. For Hong Kong, will be Baba and Tencent. So I'm really focused on tech stocks, and although I feel that they might be a bit overvalued right now, but I believe they still have a lot of potential to grow even more. And I'm just waiting for the right price to get in. Yeah.
Awesome, Yi Xiang. Congratulations once again to being the third. And hope you enjoyed the tournament. All right.
Yeah, I
Thank
did.
you.
Thank you so much.
Thank you so much. All right, let's move on. Right. Okay, in second position with 18.74% total portfolio returns, we have Kenny Chia, aka the Snowball. All right. So Kenny, hi.
Hi, can you hear me?
Yes.
Okay, cool. Do I speak now?
Yeah, sure.
Okay,
so
all right.
okay, just to give you guys a heads up, right? So Kenny is actually last year's Investor One Stock Pitch Challenge winner as well. Yeah. So Kenny, the time is yours.
Oh, okay, cool. All right, hi guys. I would just like to take the opportunity first to thank the team, Investing Note team, to organize this competition. I had great fun. So just a bit about me. So I'm a final year undergraduate at SMU. So I'm still studying. It's project week now, so I'm like really busy. I started investing at the age of 17. So I started quite young, fortunately, and I currently manage my own investment portfolio across multiple geographies. I'm also as Ethan mentioned, my team and I won the first ever Investor One Stock Pitch Challenge last year. We initiated on Hyphens Pharma, if you guys are aware. We initiated the company at about 20 cents. So right now it's at about 40 cents, the last I checked. So it's up about 100% since. The group of us also write about investment research at the Snowball. So the link is over there if you want to check it out. So the website actually seeks to provide actionable investment ideas to investors globally. So we just started it at the start of this year. So there's only 3 companies that we write about, so that we have covered so far, and fortunately they've done reasonably well. So yeah, that's about me. I was asked to share some tips about trading. So as you can see, I'm not really a trader. As Yi Xiang mentioned, like as you start out, you don't know what you're good at, right? So I also had my own fair share of trading experience. So like I always funded accounts at the start. I started off as a trader, funded the account. Then like I'm not very good at it as compared to investing. But from the strategies I've employed in this DLC competition, I think 3 key points when I think about how I was able to get the kind of returns that you've seen. So firstly would be, to have a plan and stick to it. Most traders, I feel, especially those that don't make money, they don't have a plan. They just go by gut feel. They look at the chart, they go by feeling, and it's often not a very reliable indicator, in my opinion. So yeah, have a plan and stick to it. And it's always good to know your exit before your entry. So what it means is, whenever you enter a position, before that, you need to know what price you want to take profit at before you enter. And at the end of the day, as mentioned previously, I think by Desmond, you need to find all the asymmetric setups, setups with the kind of limited downside risk with large upside potential. This is very easy to just say, but like it takes many years to hone to find out what setups have that kind of asymmetric risk to return profile. So I guess it's really try and fail. I think mistakes is a great teacher. So yeah, those are the tips I have for trading. So I'm a long-term investor, so perhaps it may not be a very relevant trading idea, but I think the stocks that I'm personally looking at, the stocks that I have who are in my core holdings are in Singapore in particular is China Sunsin and CNMC Gold Mine. I've written about it. So if you want to find out more about details why I like it, you can check out the website. It's a very comprehensive write-up by my team. But broadly speaking, is really for China Sunsin is really the China macro and underlying price recovery. And for the CMC gold mine is, if you look around, the entire macro environment is very conducive for the gold price. And if you do the financial model, which we've done, you realize that they are trading at a compelling valuation, if gold prices stay at this 1900 levels moving forward. Yeah, so thanks for your time.
All right. Hey, thanks, Kenny, for sharing.
No problem.
Wonderful. All right. So let's move on to this. All right, right now, of course, the save the best for last. In first position with 28.14%, the ultimate trader, Aaron Sim, aka the Bear Proud. Congratulations, Aaron, for being the first in this tournament. So just to give you guys a background, right? Aaron also happens to be 2018's SGX Bull Charge Challenge. All right. So Aaron, are you there?
All right, hi, I'm here. Thanks, Ethan.
Yeah, awesome. All right, Aaron, the time is yours.
So really,
share a few words with us.
Sure, we do. Yeah. So thanks, Ethan. Thanks, guys. Societe, Investing Note, SGX as well, all the sponsors. So really, I'm just trying to give a quick presentation to you guys. First, start off with what the Bear Proud is, things that we do, and then probably how investors or traders can use DLCs to actually hedge their portfolio and take on a view. So the Bear Proud, we started the Bear Proud in 2018, me and a group of friends. So it's mostly for looking at macro trading, macroeconomic analysis. We do a lot of cross assets, looking at all the way indices, FX, commodities, and such. So because we believe, of course, these days it's all interconnected, rates and stuff. So one markets can easily affect the rest. So we look for hints from other markets. If probably looking at treasuries, the rates will give us a hint of if anything's going to happen in equities and such. And yep, so I wouldn't say we are really trading in terms of like DLCs and such or equities. I wouldn't really think that we are too much of an investor as well. I would say we are probably termed as speculators. To me, there are probably three kinds of different guys in the markets: traders, investors, and speculators. So we are pretty last. You can say that we are punters. You can say we are betting on the markets. But that's pretty much what we do. We take a view on it. So, and yes, some of the stuff that we won first place in SGX Bull Charge, third place in 2018 as well. I think Societe and UOB had a SGX and UOB had a trading tournament then as well. And of course, this new one in 2020. So yeah, I'll go on next, please. Thank you. Thanks, Ethan. Oops. Yeah. So just a quick market outlook for everyone. Really, what's next within the next 3 months is a bit hard to really look further than that. US elections next week. Our view is that it doesn't really matter actually, because it's hard to tell exactly what the markets are going to do. Be it if it's a Trump win or be it a Biden win and such. So I think we've seen markets falling this week. Most of it would be really due to the rising COVID numbers we see in the EU and the US. So I think you see the DAX down 3%, probably 3 days in a row, almost down 8 to 9% since the Monday open. And really, if you look at like the Nikkei, places that doesn't really have COVID cases, it's really pretty much flat. STI just down 1-2%. Australia, it's hanging there, not doing much. So I think we can see a really a divergence between global equities, the guys who are badly hit by COVID, and of course there's a lot of talk on vaccine and stuff. But I think the markets or probably politicians and the markets are trying to really position us into a more of a positive mood. Myself, I think if we don't really have a vaccine for SARS, we don't really have a vaccine for HIV. It's hard to think that we can get a vaccine for COVID-19 in 6 months. 1 year, 2 years. So we are probably not that bullish. I think the market have to be realistic. There's a good chance that we don't get a vaccine next year or even in 2022. And yes, industries will change. Yes, maybe tech will be the place to be. But yeah, overall still bearish on COVID. Central bank impact, definitely the good bounce since March this year. All central bank support. Yes, all the tech stocks, excess funds, the flow that the money flow that flows into all the tech and everything. So I think as you see this week as well, Dow Jones probably falling like 6 to 7%. Tech is just down 1.5, and yeah. So I think, not too positive on global markets. I think if COVID situations the lockdown moves in, it's most likely that we have to be realistic. We shouldn't really be trading at such high valuations. That's what we think, including the tech. So yes, for guys, I think for guys who are looking to probably have an entry, I think tech could be a bit overvalued at the moment. We think it could probably easily fall. Individual stocks fall by 30%, and probably that will be an entry point if you guys are keen. And of course, we're looking at China. I'm actually very keen in China markets, especially for 2021. Again, maybe it depends on who wins the US elections. If it's Trump, and then we are going to get trade war again. So there might be some headwind. But other than that, yes, I think the next 5 years is going to be China. As you can see from the Chinese meetings and the structural meetings that they have this week for the next 5 years, I think we are actually expecting some kind of a greater market access for investors. We could see more fund flow if that happens. I think we've recently, President Xi visiting Shenzhen, and that's going to be the next Silicon Valley. They might make it a financial hub as well, and that's, I think, really paved the direction towards China opening and yes, probably a great potential there. Yeah, I'm good for the next slide. Thank you. Yeah, so 3 months outlook. We're going to take risk off the table. Equity markets are trading at very high valuations. Yes, it's going to take profit if you're long waiting or hedge long equity portfolios. If we get a fall, and I think when I mean fall, I think I'm talking about at least 20% on the index. So individual stocks probably down 30, yeah, thereabouts. So could be a good one to actually pick some Chinese calls, whether you want to do it by DLCs or maybe by the FTSE A50 and such. But yeah, we're looking at something along those lines. The next slide, please. Thank you. Yeah. So just on a quick touch, since this is about DLCs and such. How to actually do hedging on long equity portfolios. So and what are the benefits? Just a quick run through on some of the benefits that we think you can actually use for DLC hedging for equities. So assumption is that you have a 200K Sing dollar portfolio, STI blue chips, and you think that it's going to be bearish in the next 3 months. Got 2 options: either that you liquidate your entire portfolio, or if you really think that it's going to be bearish, like the view that we have, then probably you should liquidate. We're looking at the commission charges for selling all your stocks away. I just took this from DBS website. Maybe some other guys might have cheaper rates or more expensive rates, or using the CFDs and such. But anyway, I think the two-way commission comes into around 720 considering two-way because I'm considering that you will go long again at a time that you think is suitable. Another way is actually we think that you could possibly hedge using the CFDs. So you can take a look at the next slide, please. SocGen has these DLCs short which is basically 7 times the short of the MSCI free Singapore free index. So this is I think they have 30 to 40 stocks there. Most of them will be blue chips, 20 to 30 stocks there. Most of them blue chips. So I think there's a quite good correlation with the STI. And yeah, the assumption is that it's the Singapore blue chip portfolio. 7 times leverage. So to probably hedge to get a good thereabout hedge on 200K value, we can just look at $30,000 invested in or placed in this DLC. Commission rate, since it's under 50,000 per trade, I'm going to go for a slightly higher commission rate and two-way as well. So of course, holding DLCs, there are some management fees that you have to pay when you are and the value actually sort of corrodes on a holding, but the market maker actually make markets for for the prices, and they will actually over a long period of time definitely there will be some deduction from the value of the DLC. So it means the DLC will be the price of the DLC will be lower if it's still status quo. So yes, overall I think you get to hold on to dividend paying stocks as well. So you might have some portfolio which you think might not be greatly impacted, but still lower. And then yeah, you can actually hold on to your dividend paying stocks. Or actually the stocks that you hold on is going to declare a dividend within. Is not going to declare a dividend. He's going to declare a dividend within the next 90 days and such. So you can just hold on to them and then just hedge using short DLC. So, but of course, actual hedging performance depends on what the portfolio holds versus the MSCI free index. There is also a compounding effect on DLCs. So I think investors have to take note. Yes, probably on the negative side, the hedging effect might not be that great if the market actually goes against you on the DLC. And for the long side, we're looking at long China. So looking at this DLC that SocGen offers is 7x leverage. It's the Hang Seng China Enterprises Index. So we are very bullish on China into 21. So yes, not too sure if anyone really looks at the FTSE A50, but it is actually at an all-time high outperformance compared to A-share or even Hang Seng. So yes, there seems to be some money flow right there. Not too many guys talking about that. Could be a good indication of a long China. I think there's someone behind the market. And yes, looking to position for a buy on dip into 2021. And yes, you can actually rely on such DLCs 7x and then yeah, take a position on there from there. Yep. So come to the end of the presentation. Yep. Thank you so much. You can visit us on Investing Note. We have a Facebook page as well. Yeah, just hit us up if you have any questions. Thank you. Hey, Ethan, I think you are on mute.
Hi. Thank you, Aaron. Thank you, Aaron, for the wonderful presentation and the heads up on the China market. Thank you everybody for actually coming to this, attending this webinar. So, right now it's COVID period. Last year is always a physical event, right? So it's a bit, COVID just, changed everything. But I'm glad that you guys are here as audience as well. So if you like to trade, these are the ongoing promos. I reiterate again. So these are the ongoing promos with all the partner brokers that we're partnering with. All right, scan the thing and you can, get insight and you start exploring the different promos. All right. Once again, thank you everybody. Congratulations once again to all the winners, top 3 winners as well. And also a special shout out to our co-organizer, Societe Generale and SGX as our sponsor for making this tournament happen. All right. With that, wish you guys a good evening and stay tuned for our next tournament next year. All right. Thank you, guys.
Thank you.
Thank you, Ethan.
Okay. All right.
Thanks,
thank
guys,
you
for the sharing.
All right. Thanks.
Thank you.
Bye-bye.